Hello, people. So I think I might not have enough time to discuss the paper I gave you all. So hence I'm doing this recording. All right. So I'm going to discuss. This is part A. So I'm gonna discuss only MCQ. Right. So this paper is year 11, mid-year. Right? MY stands for mid-year. So 2021. Okay. So I'm gonna do MCQ. I'm gonna speed run this. Right. So therefore, bear with me. Okay, I'm not gonna go through everything in details, so hope you can keep up. All right, number one, which statement about bookkeeping and accountings are correct? So we are finding things that is correct. So one, accounting is performed periodically rather than daily. Yep. Okay, it's on period, right? How long to how long? Accounting relies on having accurate bookkeeping record. Definitely, yes. Okay, bookkeeping includes preparation of financial statement? No, hell no. Okay, bookkeeping is just recording. So bookkeeping just for recording. So 3 is out. If 3 is out, you know B is out, C is out. Okay, it's either A or D. Since we know 1 is definitely correct, then A is the answer lah. Bookkeeping involve recording, right? So 1, 2, 4, easy. Next one, which group contain only liability? So only liability. So anything that is not liability, then you know that's not the answer. Bank loan is liability, trade payable is liability, but prepaid rent is not. Prepaid rent is expenses that you paid in advance. You paid first, so people owe us. So A is out. Bank overdraft liability, TP is liability. Unpaid wages, yes. So answer is B. Unpaid wages, that means wages due. Okay, accrued. This is called accrued expenses. We still haven't paid the expenses that we're supposed to pay, so it's our liability. Okay, therefore, B is the answer. Then the rest you can check, they are not. Okay, number 3, which does not reduce the owner's capital, right? So which one does not? So you go through A, B, C, D and see which one will not reduce. Okay, so business expenses paid using a personal check. So will this reduce? Definitely yes, it will reduce. Okay, because personal check means this is contributed by the owner. Okay, and owner give his money and then paid for business expenses. Definitely, owner's capital will reduce. Technically, if you guys don't understand what it means here, okay, tell yourself this. Capital also means what? Means business, right? Business owes owner, right? That's what capital also stands for. What the owner contributed, also what we owe the owner. So if we use the personal check paid for business expenses, yeah, that means we owe him lah, right? These are all capital. Cash withdrawn from the business bank account for personal use. Personal expenses paid using business, which does not reduce. Cash withdrawn from the business bank account for personal use. Definitely, this is drawings. Okay, and what happened? Drawing will affect the owner's capital, because at the end, right, capital will minus the drawings mah. Okay, goods taken for personal use. Wait, this is also drawing. Did I read wrongly? Sorry. Personal expenses paid using business cash. Oh yeah, so all these are drawings. My bad. Okay, so I read it wrongly. So yeah, the rest of the answer are all drawings, which drawings will definitely reduce the owner's capital, right? Because the owner already take up to pay for his own stuff. Okay, so business expenses paid using personal check. That means the owner is putting more money in there. That means the capital is increasing, right? Capital is going up here. So therefore, A is the answer. Sorry, my bad, read wrongly. Okay, because the time now is 1:39 a.m. I'm doing this midnight. Haven't slept yet. Oh gosh. All right. 4. Joel purchased a motor vehicle, okay, and then using check from his personal bank account. So this is the owner using his own money to buy a vehicle for the business. So how do we record this? So it's a double entry here, right? Obviously, using check from his personal bank account. So that means this is actually capital, right? Anything contributed by the owner, right, from his own stash. So capital is always CR. So therefore, answer is donkey. Okay, if you got more motor vehicle, TR motor vehicle, CR capital. Okay, so be careful, not using not bank, because the check is from his personal account, right? Technically, this is capital that he contributing. Okay, so that's answer is donkey. Double entry to record cash discount given to credit customer. So which account are we talking about? We actually talking about discount allowed. Okay, because we giving cash discount, not we give cash. We're just giving cash discount to our customer. So the double entry for discount allowed is DR discount allowed because discount allowed is expenses. So always DR. So it's either A or B. Are we giving cash? Hell no. Okay, always remember we give people discount. We don't give them money. All right. So the answer is A. DR discount allowed. CR TR. Okay. Control account. Remember control account. Definitely you need this answer. All right. Number 6. Sarah purchases goods on credit from Zola. Sarah owes Zola 400 on 1st May. She paid this on 3rd May after deducting 5% cash discount. Sarah made further purchases for 280 in May. Right, all these things happen in May. Yeah. So the question asks, what were the opening and closing balances on Sarah statement of account for May? So yep, what is the balance? So at the end, right? So anyway, first and at the end, opening balance. What happened here is on 1st May. So what happened on 1st May? See, Sarah owed Zola 400. So very obvious the opening balance is going to be 400, right? The starting balance. So it's either C or D in this case, right? So what happened now is on 4th May, she, which means Sarah, paid settle this, right? She paid this on 4th May. That means she's trying to settle the amount that she owed, which is the 400. So which means, yeah, she paid. Definitely she don't pay 400, but because she do get the 5% cash discount, technically she settled everything lah, right? She paid off the whole 400. Okay, so she paid 95% and the 5% is discount she gotten. All right, so the 400 done. Okay, no more already. And Sarah made further purchases 280 in May, but they didn't say whether got paid or not. So we assume that yeah, it's not being paid, okay, because every time she bought, she buy on credit. So therefore, what happened now is Sarah owe 280 at the end of this. Haven't paid yet. So the answer here will be C. Closing balance is 280. Opening balance is 400. Okay, not 300. Yeah, because the 5% yeah, deducted already. The 400 is settled. Okay, she paid off everything. 7. Statement of account issued to customer at the end of the day, right? Invoice 250, credit note $10, and then cash discount 5% if payment is made within 14 days from the statement of account. So what happened here is the customer paid this amount on 12th June. Okay, on 12th June. The statement from this statement is 31st May. So have we passed the 14 days? Right? Not yet, right? Yeah, because 12th June is still within 14 days, right? So in this case, how much did the customer pay? Wait, what? Sorry, my bad. 12th June, 31st May. Customer make on 12th June. Has we passed this? I think, yeah, not yet, correct, not yet. So how much did the customer pay? I'm so sorry, it's so blurry at this moment. All right, so 250 invoice. Okay, so start owing, and then after that, there's a credit note. So what happened to the credit note? You will minus $10. So therefore, 240 still owe. And since she paid this amount within 14 days, right, 12th June, so she also entitled to 5%. So therefore, you take, because the question asks how much did the customer pay, right? So just take 240 and you can either minus 5% or you times with 95%, and then you get the answer. So calculator 240 and times with 95%. And I get the answer 228. All right, nice. So answer is B, correct. Okay, 228. Okay, so you have to check lah, the dates and all. Okay, yep, it's within 14 days. So therefore, entitled to the 5%. All right, next one. Number 8, the following account appear in ledger of LUT. And then we have an account of full. Okay, yeah, so together we get full LUT here. Okay, so which statement is correct? So you have to learn how to read like T accounts and all. So you see, what account is this? You see full account. And then in there, you see purchases. So purchases is always related to, yep, our TP. So technically, full is our TP. Okay, TP is liability lah. All right, and that means we are LUT. Okay, so which statement is correct? So if you look at ABCD, all right, so A, On 1st March, LUT was owed by full. Is that the correct thing? No, because if people owe us, then the balance BD is supposed to be on the left side. So you can remember this. In all T accounts, regardless what account they are, okay, don't care what they are, balance BD on the left side. This means people owe us. Okay, so remember this. Okay, this always means people owe us if the BD is on the left side, or asset lah, technically, right? I mean things that we own. Okay, yep, this is actually an asset. And for balance BD on the right side, this indicate we owe people, we owe others, which means this is a liability. Okay, so is it LUT was owed by full? Answer is no, because all right, we are owing full, as you can see. Okay, then on 12th March, what happened on 12th March? Purchase goods for 250. Obviously no, because full is a supplier, right? So LUT is the customer in this case. That's why B is also out. Okay, so in this case, A is out, B is out. C, on 28 March full, on 28 March full paid LUT 100 by check. Is it full paid? Definitely no, because right, full is a supplier. How would supplier pay the customer? Doesn't make sense. So answer is donkey. So on 31st March, LUT owe full, right? So as you can see, CD and then CD bring down, that means you see balance BD on the right side, 250, and this happened, I mean, on if you bring down, it become April 1st. So balance BD on the right side means we owe people, right? Yeah, the CD and then the BD. So you can see this way. So we owe LUT owe full, correct? LUT owe full. Okay, next one. What is correct about bank reconciliation statement? So just remember this. Bank only prepare one thing for you guys, and that is bank statement. So in this case, is it prepared by the bank? Hell no, right? That means the answer is either A or B. Okay, it's not prepared by the bank. Is it prepared by the trader? Yes. Okay, yeah, prepared by the business. Is it part of the double entry bookkeeping? No, because double entry bookkeeping means got level 1, level 2, level 3. Level 1 is DRCR, level 2 is T account, level 3 is balance CDBD. So your bank reconciliation statement don't have all these things, right? So therefore, no. Right? Answer is A. Okay, easy peasy. Which is an error of omission. Omission means totally forgot to record the whole transaction, the whole thing not there. All right, so therefore, you have to go through all the answers here and then see which one is like totally the whole thing forgot. Okay, no entries have been made for the purchase of stationery by check. Oh, this one very good. A is the answer already. Yeah, that means the whole thing didn't do. Okay, whereas B, purchase of stationery has been entered only in cash book. This is single entry, right? Only do one side, didn't do the other side. Purchase of stationery have been debited to the purchases account. So stationery to purchases account. Okay, so name is wrong, but stationery and purchases both also is expenses. So they are wrong name, but in the same class. So this is commission. Okay, this is error of commission. Wrong name only, but same class. Stationery account had been omitted from the trial balance. So this is by itself. That's the name. All right, omission from trial balance. So answer is A lah. Okay, number 11. Ali, financial year end 28 February. During the year end, Ali paid wages 42500. And then at the end of the month, 1400 were accrued. So yeah, haven't paid yet. Only pay 42500, haven't paid the 1400. So which journal entry record the transfer? Record the transfer from the wages account to the income statement. That means yeah, they're actually asking what is the amount that we send to the income statement. So people, in actual fact, yeah, we only paid 42500, but what about the 140? Do we need to include the 140? Yes, it's also part of this year, right? Can you see? Yeah, it's part of this year. So accrued, you need to plus back, remember, right? In the formula. Okay, how the formula sounds like again, we have the let me draw the blocks for you guys like this. Okay, and then this way. Okay, so we have accruals and prepayment. Okay, pre, then S stands for starting, E stands for year end. All right, you guys still remember? So you all are taught to do the year end first. Remember, accrual need to plus back, and whereas prepayment need to minus because it's not related to this year. Then the starting is the other way around. Also here minus, then here plus like this. Okay, here minus, here plus. Okay, so right now we are looking at the year end, right? Year end. So year end, if you have accrual, year end accruing to plus back. So whatever amount that we paid need to plus back lah. So in this case, we need to send to income statement. You have to take 4250 and 4250 and plus the 1004. And in this case, we got 43900. So this is the actual amount that we need to send to income statement. Okay, income statement have to appear 43900. And question asks us the double entry. How does it look like in the journal entry? Journal is all about double entry. Okay, which means our wages account like this. Okay, so the bank 42500 like this, and then you have the balancing, which is the we owe people. So you can use the PBAP. You can do this part PBAP. But to make things easier, rather than telling you all this, because I'm not gonna like revise here too much. So therefore, just remember, wages is what element? Yeah, wages is expenses, right? So when you transfer to income statement, you see wages, expenses always on the left hand side. That means the 43900 on the left hand side here, right? Then when you transfer, yeah, the income statement appear on the other side. Yeah, again, you can use the PBAP part, right? You notice that the I is on the other side. So now when you reverse out this thing, right, swap it to double entry, again, reverse back to level 1. So you notice that your answer is going to be debit income statement. Okay, debit income statement. Or you can also ask yourself this lah, right? So in income statement, okay, the old method of income statement, expenses is always on the left side, and then income is always on the right side. Okay, and wages should be on the left like this, right? Because it's expenses. So as you can see, wages appear on the DR side. So you can DR income statement and CR wages. So that's the answer. Okay, you need to know how to reverse it back only. Okay, when you send to income statement. All right, next one. So the purchase of furniture, okay, purchase of furniture was debited to fittings account. What type of error was made? So again, you have to be careful. Just because you see the word purchase doesn't mean it's purchases. Purchases is only meant for goods, only meant for product that we are reselling. So in this case, we bought furniture. Furniture is asset. But what happened now is we debited to fittings account. So instead of calling it furniture, we put it in fitting. Hey, fitting is also asset leh. So both also is asset. They are in the same class, but the name is wrong. So this is error of commission. Okay, error of commission, wrong name, but same class. Okay, you have to know the difference. All right, 13. On 30 September, our bank statement show a credit balance. Okay, bank statement show credit balance. Bank statement from our point of view is terbalik one, the other way around. When they say credit balance, to us, this is a positive, right? This is a positive balance. If they say debit, then it's negative, right? But our cash book is DR is plus, CI is minus. Yeah, bank statement is the other way around for us. Now, Ahmed found that check issue for 90 and a deposit of 50 check had not been included on the bank statement. So what was the balance at bank shown in the Ahmed cash book? So they're asking balance at bank shown in Ahmed cash book. So how to do this? Technically, you need to know what is check issued and deposit not included in the bank statement. Like, yeah, there are these two things, but haven't shown in bank statement yet. So these are called amount not yet credited and unpresented check. Now, which one is ANYC? Which one is unpresented check? So unpresented check is the one that the check that we pay someone, right? Check issue. So 90 is unpresented check. I call it UC. 500 is ANYC, amount not yet credited. Right? Deposit means we receive lah. Deposit is we get, but haven't appeared in bank statement yet. So like this, what we can do now is do the bank reconciliation formula. So bank reconciliation statement. Yep, there's a formula. The formula start with balance on bank statement first. Okay, balance on bank statement. So our bank statement balance is positive 2500. Okay, next formula is we need to plus what? Plus ANYC. So ANYC in this case is 500. And then need to minus what? Need to minus unpresented. Check our unpresented is 90. So I'll put a bracket lah, is to minus. So at the end, what do we get? We get a balance on CB is balance on cash book. So that's the formula for bank reconciliation statement. So 3,000 minus 90, you get 2910 lah. So our answer is C, right? 2910. Take 3,000 minus 90. 3,000 minus 90, 2910. Okay. Got it? 14. All right. Stephen, major competitor, invested in a new machine, making goods more cheaply. Stephen know that this will affect his sale, but he did not record this in the accounting record. Yep. So which accounting principle is he applying? So in this case, I mean, he can't measure how much losses that he will be it will affect his sales and stuff like that. So when you can't measure, so it's called money measurement. Yeah, then you don't record. Okay, money measurement. Next one, 15. Traders spread the costs over the year which benefit from the use of the vehicle. So which accounting principle being applied? So you are spreading the cost over the years. So we don't straight away like you buy this whole thing and then we straight away like, okay, so this whole thing is this year's cost. No, that's not how it works. So that is called matching, right? The income and the cost is matched on the same period. So imagine you buy this vehicle. This vehicle help you to probably earn some money, you know, there's a revenue and stuff, but you don't use the whole thing, so you only use part of it, right? That's why it is called matching. 16, right? Business prepare based on the basis of foreseeable future, and the keyword here is continue. So therefore, which one is the one with the continue keyword? Yep, going concern. Easy, right? Going concern is always continue and continue the business. All right, 17. An item of capital expenditure. What do you mean by capital expenditure? This is actually asset, okay, non-current asset, has been incorrectly treated as revenue expenditure. Revenue expenditure in another name means it is expenses lah. All right, something that is asset but have been treated as an expenses. That means we didn't record the asset and we record it in the expenses. So what do you think will happen, right? So what is the effect of this error to our asset and to our profit? So I'll suggest to do the easy one, which is the asset part, because it's easy to see. It's an asset, but you didn't record. So what will happen? Of course, your asset will going to be understated, right? Your asset is going to be lower because it's not there. It's supposed to be there, not there. All right. Then what about the profit? Okay, to calculate profit, what happened is I minus E, you get profit. Okay, so as you can see, the asset now recorded in the expenses, which is not supposed to be. So what will happen to your expenses? Your expenses will be too much, right? Your expenses will overstated. So when your expenses overstated, what happened to your profit? Your profit will, go the other way around. It will also be understated because I minus E, right? So it will go down. So in this case, our answer is donkey. Okay, both also understated. Easy peasy. 18. Which of the following will be classified as capital receipt and revenue receipt? Capital receipt, there are three things. Okay, capital receipt is number one, when you sell NCA. Yeah, you sell NCA, that's called capital receipt. Then number two, whatever owner give us, as in that owner give us capital, that's also called capital receipt. And lastly, when you borrow money, right? The money that we get from borrowing is also known as capital receipt. Whereas revenue receipt is technically our income. Okay, and our main income is sales, right? When you sell things, you get money. So that's called revenue receipt, and then all the other income. Okay, so the first one, the proceeds received from the sale of computer. Computer is NCA, and we are selling NCA. Technically, this is a disposal. It's called disposal. So the money that we get from disposal, it is capital receipt. So sale of computer, it is capital receipt. Okay, the profit made on the sale of the computer, profit wise is income, right? So income are all considered as revenue receipt. Okay, so still A or B. The sale of the owner's computer, the proceeds means the money that we get. The money that we get from selling the owner private computer, and then subsequently, all right, the money put into the business bank account. This is actually he's contributing into the business lah. So anything contributed into the business by the owner, yep, is going to go known as capital. So answer is B. Okay, so this is how we do, right? The profit itself is revenue, definitely is income. The selling of the NCA is disposal. Disposal is capital, right? So I have to go through the theory again. 19, we have John paid 180,000 for machinery on 1st Jan 2019. Okay, we bought this machine on 2019, January. Then he depreciate this asset using reducing balance method. Okay, diminishing also means reducing at 5% per annum. Per annum is 1 year, 5%. Now, the question asks us, what was the balance on the PFD, right? The provision for depreciation account on 1st January 2021. So how many years is there? From 2019 until 2021, technically 2019 depreciate 1 year. Then 2022, sorry, 2020, right? 2019 1 year, 2020 1 year. And then on 1st January 2021, so we haven't used it, so 2 years lah, right? So what is the total depreciation, right? Because provision for depreciation account is actually the total, right? You will see the total accumulated depre, something like that. So let's calculate the first year, right? For 2019, okay, 2019 is our first year. How to calculate first year? It's very simple. Just take the cost price, 18,000, and you times with 5%. Okay, then you get the depreciation for 2019. So in that case, should be 9,000, I think. 1800 times with 5%. Oh, sorry, 900. My bad. Okay, so 900. So what happened in our PFD account, right? PFD, provision for depreciation. The first 900, apply the double entry, because double entry for depre is always the same. It's always debit income statement, credit PFD. So we are doing PFD account. Credit means on the right side, you put 900 here, and then you put income statement. Okay, so this is first part, first year. So you get 900 total, then you get balance CD, 900. And you balance BD, that thing, 900. So this is for the first year. Now, second year, what happened? Second year is 2020. Okay. In second year, using reducing balance method. So what's the formula again? You have to take MBV, right? MBV, net book value. So how to calculate net book value? Take the original, which is 18,000. You need to minus first. You have to minus the first year depre. Then only you times with the 5%. So in this case, which means 1800 minus 900, you get 17100. Then now you times with 5%. Okay, then you get 855. So this is our second year depreciation. So second year, same things. The double entry is always fixed. It's always DI income statement, CR, PFD. So second year, I have to put 855 on the right side. Again, you put income statement, then you CD plus them together. You get 1755 after balance CD. Of course, don't forget to do your balance BD. Okay, so the bottom one is going to be balance BD 1755. So the question asks us what was the balance on the provision for depre account. So as you can see, the number has to be 1755. Is it left side or right side? It's always right side lah, because this is A minus account, right? A minus account, balance BD always on the CR side. So answer is boy, 1755 credit. Okay, we're looking at this one, the red color one. Okay, easy. Next one, we have 20. Ravi, financial year end 30 April. Ravi bought the vehicle 8,000 on 2018. And then he sold it for 4050 on 1st May 2020. All right. Then what he uses for depreciation, he used reducing balance method, 20% per annum. Now, what would be recorded in the income statement for the disposal? That means when they ask you for income statement, they're talking about is it gain or loss lah. right? So how to do disposal again? Disposal got 3 steps, of course. Step number 1, you need to know the cost price, the CP. Step number 2, you need to know the total debris. Total debris is PFD, right? Total debris is provision for depreciation. The third part, of course, you need to know the selling price. Yeah, these 3 main things. You need to know the selling price, cost price, PFD. Then you can calculate and get your gain or loss. All right. So what is our cost price here? So let's do a disposal T account. Okay, or you can just fill in all the number there and then manually calculate, also no problem. All right, so I just want to do this. So disposal of motor vehicle. Okay, so the technique here is whatever that they're disposing is always on the left hand side. So put motor vehicle here. So what is the first step? First step is cost price. So the cost price is 8,000. Okay, then you should know the depreciation is always the opposite of our cost price, right? Our asset. So PFD will appear on the right side. Now, do we know what's the amount? We don't know, but you have to calculate yourself lah. So let's calculate, right? The PFD. So how many years is this? This thing has been ever since 2018 until 2020. So 2018 1 year, 2019 1 year, and then yeah, and then after that 2020. So if you're not sure, then draw out lah, the range things, right? How many years to how many years. So the question said, what would be recorded for the year ended 30 April 2021? So how many years is that? Technically, you can just write down our first year. I think I better do somewhere down here. All right. Our first year, 1st May 18. So it's gonna end on, okay, 30 April and 1019. So this is our first year. All right, our second year, of course, start from 1 May 19, okay, and all the way until 30 April and 20 is our second year. Okay, then on our third year, which is start from 1, 5 and 20. Oops, wait, 1520, what happened? Already sold already. That means we had this thing for 2 years. So you have to calculate total depreciation for 2 years. So how to calculate for the first year, right? For the first year is always straight line method, simple. Just take 8,000 and times with 20%. Right, 10% is 800, 20 is 1,006 lah. So 1,006 for the first year. Okay, this is first year. Then what about second year? Because we had this thing for second year, right? And then this is reducing balance method. Therefore, second year is 8,000 minus 1,006. Then only you times with 20%. Yeah, this one mafan a bit, need to calculate like that lah. All right, so take calculator, 8,000 minus 1,006, and then you times with 20%. Okay, so you get second year is 1280. So this is our second year. Okay, so you see PFD is for total debris, right? Total debris. So therefore you have to plus these two together. So 1600 plus 1280, you get 2880. So that is our total debris. Total debris is 2880. All right. Then what about selling price? How much did we sell it for? We sold it for 4050. So selling price is always on the right hand side. So 4050. Okay. And what do we write here? When you sold, you should get money. So it's either cash or bank. So I put here cash or bank. Okay. So what you need to do now is, of course, do your balancing, and then you figure out whether is it profit or loss. All right. So where is the income statement? Now, of course, to do this, you can also manually ask yourself, how much do you pay this for? You paid this thing for 8,000. Then it depreciated 2880. So what's your net book value? 8,000 minus 2880. You get 5120. So your actual value of this vehicle is 5120. But how much do you sell it for? You actually sell it for 4050. Okay. So in this case, 5120 minus 4050. Okay, definitely it's a loss lah, because your selling price is lower than the actual value. So it's a loss. It's a loss of 10 70. So when you do T account, the balancing part is supposed to look like this. Put the higher number, so 8,000 is higher, 8,000 is higher, 8,000 minus 280 minus 4050, you get 1070 loss. So here 1070, and then you put income statement. Okay, so income statement on the right hand side, as you know, this is a loss lah. All right. Okay, all good. If you cannot see whether it's gain or loss, you can also do this. You can also, you know, the one that I taught you guys, income statement old fashion, the old method. Expenses is on the left, income on the right. So you see one left, one right. As you can see, your income statement appear on the right side. Then when it comes to income statement, because this is disposal account, so the disposal will appear on the left side, one left, one right. So therefore, expenses is a loss, right? So therefore, answer is C. Okay, 21. Few more, then we are done. The following accounts appear in trader's ledger: provision for depreciation equipment. All right. So as you can see, income statement 3,000 for the first year depre. Okay, then second year depre is 2100. It reduced already, right? If it's straight line, then should be every year also same 3K, 3K, 3K. But it reduces. That means they use reducing balance method. So they say there were no sales or purchase of equipment during the 2 years period. So they're asking, what does the 5,100 on 1st January 2021? That means they are referring to this thing. So what does this balance BD 500 represent? So this is actually the total depre, right? Accumulated depre of equipment using the reducing balance method, right? Because as you can see, the income statement keep changing every year, right? So it's reducing. So answer is A. So this is how you see. All right, the rest is not the answer lah. So no need to bother. All right, number 22. Rashid maintain a PFDD, provision for doubtful debt, 5% of a TR at the end of each year. So we have TR 40K on 2020 and then 46K on 2021. So which journal entry should Rashid make on 31st March 2021? Yep. So you see, to know, to make entry this, they're talking about like, is there an increase or decrease? Is there an increase in PFDD or decrease in PFDD? From first glance, you should able to tell already, because you see the rate is always 5%. So you ask yourself now, 2020 last year is 40K. What happened to 2021? Wow, it increased to 46,000. If there are more people owe us, means there are more doubtful debts. All right, so definitely it's an increase in PFDD from 40K to 46K. This is increase in PFDD. Hey, increase is good or bad? Increase is not good, because PFDD means maybe people cannot pay us, right? Maybe become a bad debt, maybe only, right? But since it increased, so it's not a good thing. Not a good thing means it's an expenses, right? If you want the answer to be expenses, your income statement is DR or CR, right? So once again, right, same thing, income statement, left hand side is E, right hand side is I, right? E is expenses, I is income. So if it's a bad thing, that means it's an expenses lah. So that means definitely you will see PFDD like this on the left hand side. That means you need to debit income statement. Debit income statement always represent the thing as in an expenses. So, right. So that means our answer is either A or B here, because they're asking for double entry. But the problem is it 300 or 2300? So how to do this? I myself show you guys how to do PFDD. Very simple, right? So PFDD account, okay. So we have 2020 and 2021. So these two, right? They didn't give us any balance BD, right? So for PFDD, you have to like sort of like work backwards, right? So what you can do is you take 40K. Let's do the first one. So 40K times 5%, you should get, I don't know. So 40K times 5% is 2,000, right? So this answer 31st March, which is 1st April, right? So the 2,000 is the balance BD. So balance BD for PFDD is always on the right hand side, because PFDD is A minus account. A minus account, balance BD is always on the right hand side. So this is the top one, because this is the first year, right? The starting, right? 31st March 2020 means 1st April 2020. Anyway, balance BD is on the right hand side, the top one. So 2,000 is here. Okay. Then on 2021, it increased to 4,600. All right. So increase to 4600, then take the 4600 times 5%, right? You should get 23 lah, 2,300. The top one is 2,000. Okay, you can press calculator, you should get 2300. So this answer 2300 is going to be our bottom of PFDD. You do this way, right? You work backwards. So the second TR, right, the second year 2021, this one is the bottom one. So you put 2300. This is also the balance BD, right? Since you know balance BD is on the right hand side here, like this, the bottom one, then you can work backwards now, right? It become balance CD. Okay, sorry. Okay, balance CD 2300, right? Then you finally do balancing, right? 2300 in the total line, 2300, you missing 300, that is the income statement, right? We always do income statement last in the PFDD account. So this is the way to do PFDD, to work backwards, all right? So actually income statement is only 300. So therefore the answer is A, right? Debit income statement, CR PFDD 300, okay? Or another way, just very easy, since it's 40,000 increased to 46,000, so the difference is actually 6,000, right? Yeah, it increased by 6,000. So just take 6,000 and you times with 20%, you times it 5%, sorry, my bad, 5%, and you should get 300. So yeah, it increased by 300. That's how you see it. That's the faster way lah. Okay, but I just want to show PFDD how it's done so that you see overall how the T account is done. Okay, then we have 23, 24, 25, which these few chapters are related to incomplete record, which is not coming out this time for mid-year, right? But might as well, we just finish this. So what was the profit for the year? So how to calculate profit for the year? They give us capital at 1st Jan. This is opening capital. They give us drawings. They give us capital introduced. They give us closing capital also. So need to use the finance by capital formula. So finance by capital formula. All right, we start with opening capital. Okay, so it's given here, opening capital 500. Then the formula next one is supposed to be plus PF DY, but do we know? We don't know. We need to find this, so I put X first. And then we have capital and introduce. We need to plus capital intro, which is also known as additional capital. Yeah, just plus them. 15K. And then closing, right? There's no, wait, there's a drawings here. Yep, need to minus drawings. So minus drawings, right? Always minus. So 8,500, I put bracket lah. And what do we get here? We get the closing capital. And closing capital is given, which is 82,500. Right? So can you find X? Easy. Just do your maths only. If you're not sure how to calculate from here, then you change it back to horizontal, right? You can put 58,000 plus X plus 15,000 and minus 8,500 equals to 82,500. Then you find X, right? So in this case, X should equals to 33,000 if I'm not mistaken in the answer. All right. So take 58,000. Need to, you take 82,500. Then you minus 58,000. Then you minus 15,000. And then you plus the drawings 8,500. 8,500. Then you get, oops, answer is 18,000. My bad. Remember wrongly. Okay, X is equals to 18,000. Okay, you can always double check. Just put back the 18,000 here and then see whether do you get back the 82,500 lah. Right, you can always do double check like this. Okay, 24. We have a question said what were Abdul's sales for the year? Right, sales for the year given margin. So the moment you see the word margin, first thing first, please remember, always do this first. Always write down the layout. Sales minus cost of sales equals to a GP. Okay, always draw this one first. Then next part, you ask yourself, what does margin means? Margin means GP over sale. That is a formula. And since margin is given, which is 20%, 20% means 20 over 100. So you can ratio this now, which means GP is 20%, sales is always 100, Okay, so as you can see, sales is 100, GP is 20 lah. Then what is cost of sales? Cost of sales is our 80%. Okay, so the moment you have all this percentage, and when you have one combo value, like you know the value and then 100%, then you can find the rest already. So the question asks us, what were Abdul sales for the year, right? Sales. So we want to find sales, okay? And they give us opening inventory, closing inventory, and purchases. These three things. So therefore, these three you can get cost of sales. How to find cost of sales? You take opening inventory plus purchases, and you minus closing inventory. So in this case, then you get cost of sales. So in this case, 5K plus 58K, and you minus with 7K. Okay, and that will be, I guess, minus off 2K, so is 56K lah. Okay, cost of sale is 56,000. Okay, so since we know 56,000 cost of sales is how many percent? Is equivalent to 80%. Okay, you don't need the percentage here to do the maths because it's just a unit. Equals to 80. All right. Okay, I put percent. Okay, up to you. If you like to think that way, this is a unit. When you press calculator, do not put in the percentage. Just 80 can already. And we are finding what? We're finding sales, right? So sales we don't know. So sales value, but we know sales value is equivalent to 100. Okay, is 100%. So how to find sales, right? So simple, just find 1% first, then you get the sales ready. So how to get 1%? You take 56000 divide by 80. Okay, divide by 80, then you times with 100. Okay, so equals to a sales value. So take calculator, 56000 divide by 80, and you times with 100. You get 70,000. So that's the answer, right? Sales is 70,000. Okay, so that's the answer for sales. Easy. Last one. So they give us, again, what was the revenue? Revenue is sales, but this time they give us markup. Okay, so, and then they also give us a rate of inventory turnover. Got rate of inventory turnover, got markup some more. So many things. All right, let's see. They only give us opening inventory and closing inventory. But what can we do here? So there are two different things. Okay, so you need to know two different formula. Okay, rate of inventory turnover, the formula is cost of sales divided by average. Okay, average inventory. Then you get the rates. Okay, in this case, it is 12 times. So since they give us opening inventory and closing inventory, that means what? We can find average inventory. So how do we do that? Technically, cost of sales equals to 8,000 plus 10,000 and divide by 2. That's how we calculate average inventory. Okay, take the open plus closing divide by 2. So 18,000 divided by 2, which means 9K, right? The rate is 12 times. So what you do is to find cost of sale first, right? Cost of sale equals to 12 times 9,000. Okay, 9,000 is the average inventory. So we get the answer 12 times 9K, 108. Okay, 108,000. So this is our cost of sales. Okay, now they give us markup. So once again, the moment you see the word markup or margin, always write down sales minus cost of sales equals to a GP. So we have to put all this ratio first, right? So what is markup means? Markup formula is actually GP over cost. Okay, not over sales. Markup is GP measured as a percentage of cost of sales. So GP over cost. And they give us 50%, which means 50 over 100. So GP is 50, cost of sale is 100. So now you put back into the sales equal to GP. So GP is 50. I think I better change color, black color. So GP is 50 and cost of sale is 100. Okay, and what is our sales? Sales is going to be, of course, going to be 150. Okay, 150 minus 100, you get 50. Okay, so now we know cost is 108. So therefore, can you find revenue? Can, no problem. You have all the percentage ready. So use cost of sales 108,000. This equivalent to 100%. Okay, and we are finding sales. So sales equals to 100%. Sale is 150%. So do your maths here. Right, find the 1% and then find your 150%. So in this case, 108,000 divided by 100, and then you find, and then you times with 150. Then you get the answer. Okay, so calculator 108 divided by 100, and then you times it 150, and you get 162. That's the final answer. So 162,000. So answer is C, for the value of sales revenue. All right, that's all. So that is how we do this. Okay, so I'm stopping here. I'm gonna see you guys on the next one for section B. Bye. Good night, though.